I'm gonna go ahead and share my screen. Ray, just let me know when we're good to go.
You good to go.
All right, cool. So we're gonna do a really quick overview of the strat for everybody who, for those of you who are new, will probably still just need a little bit more information. And this information is going to be posted in Market Facts and Resources, not the Storehouse. That's where we just kind of type up everything, but actually Market Facts and Resources, you will be able to get this particular guide or cheat sheet. All right, so obviously we're studying the Strat candlestick cheat sheet here. And obviously the Strat is a trading strategy created by Rob Smith that makes trading simple by focusing primarily on price action. So when you see us in the community talk about things like a 1, 2, and 3 candle, I know there's some people who are wondering exactly what that is. So I just typed it up, broke it down to make it very simple so that you can have this, in your arsenal. So for a 1 candle, which is also known as an inside bar, which gives us universal truth. It trades between the previous candle's range, meaning that it didn't take out the high or the low of the previous candle, which can be viewed on any time frame. This candle represents balance and equilibrium, where neither the buyers or the sellers were in control, so it kind of moves sideways, that choppy action that you see. And you don't want to trade anything with a 1 or an inside bar. But once the 1 candle closes and the next candle forms a 2, then you're able to take the trade. Now, for a 2 candle, it's anything that takes out one side, either the high or the low of the previous range, and could be at the top or the bottom. It can also be 2 things, which is a 2 up or a 2 down. A 2 down means that it took out the previous candle's low, but it failed to take out the previous candle's high. A 2 up would be the reverse. A 2 candle can't turn into a 1 candle, but it can turn into a 3 by wicking up and collapsing against itself. The market trades in the direction of the most 2s. So keep that in mind. It's going to trade in the direction of the most 2s. And then for a 3 candle, which is also considered an outside bar, this candle represents price discovery because it shows that buyers are willing to buy it up and sellers are willing to sell it down. This is also what starts the broadening formation. This candle takes out the high and the low of the previous candle. So let's just go back here and I'm going to show you everything that I just stated. So a 1 candle is known as an inside bar because it trades within the range of the previous candle. So it does not take out the high or the low. So it's considered like the baby of the family, if you will. And then you're going to have a 2 candle. Now the 2 candle is either going to take out the high or the low of the previous candle. So as you see here, this candle actually is a 2 up. So it took out the it took out the high of the previous candle, which is the 1. And then a 3 candle, which is an outside bar, because obviously it's outside of both ranges. It took out the high as well as the low as the previous candle. So just keep that in mind. Now, we don't trade mother bars, and a mother bar is going to look like a candle, an extremely massive candle that's followed by even smaller candles that trade within the range of the mother bar candle. This is what causes choppiness or sideways action because, again, all those candles are going to trade within the range of the mother bar. Now, this is where price discovery starts all over again. So I'm also going to give you guys a few actionable signals. So this is just an overview of the hammer candle as well as the
Hey,
candle. Yeah, what's up?
let's slow it down just a little bit.
Sure. All right. So your actionable signals, and you guys, if I'm speaking too fast, I'm more than happy to slow down for you, but please know that I'm going to leave these resources in Market Facts and Resources so that you can have them and you can use it at your own pace. All right, we're good, Ray?
Yeah, go ahead.
Okay, so actionable signals. So this is basically the signals that give us action to move forward into taking the trade potentially. So we have a hammer candle. Now this candlestick has a large upper wick, or lower wick, I should state, with a small to non-existent bottom wick. It gets its name because it actually looks like a hammer. So if you can see here, it looks like a hammer candle. When you see a hammer candle, just think of a gun shooting something down, right? Okay. And actually, I'm sorry, you guys. Let me just fix this really quick. That was my copy and paste. So just think of a hammer building something up, rather. All right, we're going to go ahead and correct that. So when you see this particular candle, just think of it building something up. So you're going to think of an uptrend if you see something following a hammer candle. Now your entry is going to take place as soon as the next candle breaks above the top wick or the top portion of the previous candle, which is the hammer candle. Now for your shooting star. The shooting star candle, this candle has a large upper wick with a small to non-existent bottom wick. When you see a shooter candle, just think of a gun shooting something down. Now your entry will be as soon as the next candle breaks below the bottom or the bottom portion of the previous candle, which is the shooter. All right, so let's talk momentum and continuations, which are also actionable signals. You have the Momo hammer, which is a 2-1-2 continuation. So you're basically going to see a 2 candle followed by a hammer candle followed by a 2 candle. So that's going to be a Momo hammer with a 2-1-2 continuation. For your entries, you're going to enter as soon as the next candle breaks above the top portion of the previous hammer candle. This is also where you can enter a position or add to it if you're already in it. Now the Momo shooter, which is going to form within a 2-1-2 continuation. Your entry is going to be as soon as the next candle breaks below the bottom wick or the bottom portion of the previous shooter candle. This is also where you can enter a position or add to it if you're already in it. Okay. So then we have the 2-1-2 bullish continuation. So this is basically a bullish pattern that's already in place, and you're wanting to find an entry so that you can capitalize on that bullish momentum. So your entry is going to be as soon as the next candle breaks above the top wick or the top portion of the 1 candle. It will be the opposite for a bearish continuation. Your entry is going to be as soon as the next candle breaks below the bottom wick or the bottom portion of the 1 candle. So as you can see here, this is going to be your bullish continuation. Your entry is going to be as soon as this candle, this 2 candle, breaks above this particular candle here. And then it's just going to be the flip of that when you're doing a bearish continuation. So the 2-2 continuation or the 2-2 continuation for bullish and bearish, we do not take entries off of 2 candles unless it indicates a reversal. And we're going to get into reversals. So reversals, which are also actionable signals, you're going to see a 2, then an inside bar. And if you're paying attention, what number is the inside bar? Go ahead and drop that in the chat. What are we looking like, right? Getting it right?
Yeah.
All right. So it's going to be a 2, then an inside bar, then another 2. And this can either be to the upside or the downside. So if it's bullish, your entry is going to be as soon as the next candle breaks above the top portion of the inside bar, which is the 1 candle to the upside. If it's bearish, your entry is going to be as soon as the next candle breaks below, and I should have put below. I'm sorry, you guys, this is my copy and paste. I tried to get this together today. Below the bottom wick or the bottom half of the inside bar candle or the 1 candle. All right. So as you can see here, it gives you your entry targets, your entries as well as your targets if either it's bullish or bearish on the reversal. Okay. And I know what it is, right? I'm actually using one that I actually corrected. All right, so you guys give me just a second. I don't want to confuse you, but we're going to get it together here. All right. Hopefully we got that together. Okay. All right, so then we have the 3-1-2 reversal, which is a 2, then an inside bar, then another 2. And this can either be to the upside or the downside. So your entry is going to be as soon as the next candle breaks above the top wick or the top portion of the inside bar or 1 candle to the upside. On the opposite hand, you're going to have your bearish entry. So that's going to be as soon as the next candle breaks below the bottom wick of the inside bar or the 1 candle. All right. So you also have a 2-2 reversal. This can either be a 2 up or a 2 down. I'm sorry, a 2 up, 2 down, or a 2 down, 2 up. This can be to the upside or downside. So your entries for your 2 down, 2 up, that's going to happen at the end of a downtrend. So this is going to indicate that it's going to the upside. And your entry is going to be as soon as it breaks above the top of the 2 candle. Now, if it's bearish, it's going to be a 2 up, 2 down, and this is going to happen at the end of an uptrend, and it's going to be to the downside. Your entry is going to be as soon as it breaks below the bottom or the bottom wick of the 2 candle. And this will be posted, again, you guys, in Market Facts and Resources, and it will be edited so you guys won't get confused. Now, when you're in a trade and there's a 2-2 reversal, this is basically a 2 to the upside or downside, which is located next to a 2 that is going in the opposite direction. The strat states to exit this position. Then we also have the 3-2-2 reversal, which can be to the upside or downside. For the upside, your entry is as soon as the second 2 candle, so the second 2 candle, as soon as it breaks above the top of the first 2 candle. So you're going to be watching and taking action on the third candle once you see the direction that it's taking. And then your entry as soon as the second candle for the bearish side is once it breaks below the first 2 candles. So right here, this is going to be your first 2 candle. Once it breaks below, then that's going to be your entry. So you're going to be watching and taking action on the third candle's direction as well. All right. So that's your brief overview. And then I'm going to go ahead and switch it over to Ray so he can get into plotting this on a chart.
All right. So I just take like a couple quick questions real quick, just so we don't leave some people in the dust. If you have like a quick question, just like drop it in the chat or like raise your hand real quick and then boom. Because I don't want to go to the chart and then it's gonna leave you even more confused. James, go ahead and ask your question real quick.
Hey, thanks, boss. I was just wondering, are you looking at the like 1 minute, 5 minute, 15 minutes when you're looking at these candles?
All right, so let me just break it down like this. All right, so the main time frame most strategists use is going to be they look at the month to see what the month is doing. They look at the week to see what the week is doing. They look at the day and see what the day is doing, and then they'll take their entry like on the 1 hour. All right, but then so that's the higher time frames that most people use. All right, for your intraday time frames that strategists use, they use the day, the 1 hour, the 30, and the 15-minute. So let me bring you back up, James. So far, does that make sense, the James, TJ?
Yeah, that makes plenty of sense. Thank you.
Now, the other thing is it's also going to be off of personal preference. If you find that you can use the 5 minute if you want to, then you just use the 5 minute. If you want to use the 1 minute, you use the 1 minute. The main thing is just looking at 4 different time frames. Because I know some people intraday like to use different time frames. Some people like to scroll all the way down to the 5 minute. So just putting that out there. And then Rahim, what's your question?
My question is for like the 1, 2, and 3, like these candles, like what indicator is this?
So if you want the indicator, so let me share my chart. So there's resources for this in Market Facts and Resources for the TOS version, but for TradingView. So let me just bring up. Let me see, what did I scan for the other today? Let's see, scan. All right, so I'll pull up FB. So go to Facebook. Boom. Let me delete all of this. All right, so the indicator for the strat to see the numbers and stuff like that, you can either go with the crinkle bond version, which is you can just find its name. It's called candle type.
Oh, it's called the strat.
Yeah. So well, actually, that's for the well, yeah, you can look under the strat. I don't know if it'll pull it up, but the actual name is Candle Type. If you want the crinkle bond version, I use the Silent Jet version. I use a paid version, but he does have a free version. It's called the Strat Helper. So if I type it in, the Strat Helper, the free version is right here. There's like 310 people that have used it or looked at it. And so you just upload that to your chart and then you'll get the numbers. And then for the people who want the time frame continuity, you just type in time frame continuity, and then boom, you see it's popping up by Board Writer B. That gives you the day, week, month, quarter, year. And then if like as you change through the different charts, some of those are gonna come off. Like if I go up to the week, you won't be able to see the day. All right, so keep that in mind when you be like, why
Do you
mine
use the
isn't showing
pro
up the same?
version for Trading View?
Yeah, I used to use the pro. I upgraded to the premium, but I might be leaving Trading View to go back to TOS because I like how the broad informations look.
Thank you.
As you can see, how I draw it looks a little bit better to me. But yeah. So does that answer your question?
It does. Thank you.
All right, no problem. So let me put participants, you, and then boom. Let's see. Can you please show us how to stand? No, stock charts doesn't have the strat. It can't be done in Webull. And I just showed you this. And yes, it's recorded. For the most part, most people are using TradingView, TOS, Trend Spider. I can't remember what the other one. I think TC200. And this will be the last question. Then we're gonna go ahead and get on with it because I want to stall too long on this. What you got, Zoom user? You can go ahead and ask your question. Can't say your name because it doesn't show it. All right, we'll get back to you at the end. All right, so basically what we're gonna do is we're gonna go through a couple of charts. We're gonna plot your entry, your exit. People are wondering, all right, so what time frame do I look at? So what you want to start with, you go up to the month. Is your month red or green? All right, that's the first thing you want to look at. All right. So one thing that Sarah likes to do is she'll mark the high and the low of the previous month. I'm just gonna mark the high. So when you listen to Rob's videos, you'll hear him say this too, as soon as it go in force, you can hop in that trade. What that means is as long as the open, or I wouldn't say open, as long as the candlestick stays above right here, it's good. So as you can see, it's still above it. The body is still above it. It didn't wick back below it. It's still above it. So right now for Facebook, this 2 is still in force. All right. Because once it starts poking back in here, it can be doing anything. It could be, very choppy. You might be able to have you a week full of puts. Like once it break back in that range, you never know. All right. But the main thing you're looking at is seeing what that candle is, either red or green. Now, for people who do shares, it's going to matter more if it stays 2 up rather than it pokes back under that high of the previous month. The reason being is we're option traders. So a $2, $3, $4 move for some of us might net us the percentage that we're looking for. We might be looking only for 20, 30, 40%. You know what I'm saying? We can look at those increment moves on the lower time frame. All right. So sometimes you could say, forget what the monthly is talking about. I'll just worry about what the week, the day, and the lower time frames. All right. Now we go down to the week. As you can see, this past week did a 2-1-2 reversal. All right. So this is where you would have plotted an entry, right? So like, I'm going to do the replay feature. I'm going to delete that. All right. Let me delete this or change the color to teal. All right. So we know that's and also change that previous month high. Boom. All right. So y'all know what that is. So on this 2-1-2, well, we know it's a 2 because it was just up, but I deleted. But like, let's say we were looking at this, all right, before the week happened. And we was like, oh, it's a 2-1. You know, we know ones are actionable signals, and we're just going to play the break in either direction, right? But we like reversals mainly. So we rather play it to the downside, all right? So what we do first is we mark our entry, right? So we marked it. Technically, you mark both sides. That's what I like to do. I just mark both. So whichever direction it take, and then I would set the alert on it, you know, go down here, click the alert button or whatever. So whichever way it breaks, that's what we would take. All right. And obviously we know it end up breaking to the downside. So this would be our target. This would be our first target. I mean, this would be our entry, but the bottom of this too would be our first target. And as you can see, it's not looking as pretty as it does on that chart when you're looking at the strat chart, but this is how it would go, right? But then we're like, okay, if I wanted to set more targets, how would I set more targets? You would go down to a lower time frame. So we would go down to the daily, and then we would set more targets. But I'm gonna go ahead and delete this previous one because it's just gonna be too many lines. So we set, this is our entry. This is our first target. I'm gonna change our targets to red. That's our first target to take out. Then we can set the next target. And how you figure out targets or pivots, because that's what it's also called. When you're looking and you're going to the downside, so when things are coming down, you will set your targets at the bottom. So down, bottom, you will set your targets at the bottom of the candles because you're looking to take these out, the bottoms of them out, especially with green candles. You're looking to take out these green candles. All right. So let me check the chat. If your entry are just the middle of another candle, wouldn't false breakouts be very prevalent? When it comes to like let's say there was a false breakout or something like that. So let me talk about that too. All right. So let me rewind a little bit. When it comes to your breakout, let's say you set your entry right here. Your entry is 301.95. You're going to take puts as soon as it breaks below right here. Obviously, when you're doing this and you're watching it intraday, you're seeing the chart, the candles bumping up and down, doing stuff like that, right? Make sure y'all mute yourself. All right. What you will also want to do, the same way you set that entry, you can't just pick a let's say you wanted to use the candle, a candle, and you want to set your stop on a candle instead of saying 10% or 20%, right? The best thing to do is to go down to a lower time frame because you can't just set it, you'll just be plugging it somewhere in the middle of this, right? So we need to see smaller candles to see where would I want to place my stop loss at, to set my stop at. Like if it break below this point, I'm out the trade. All right. You go down to a lower time frame and you could say, you can either pick from here, pick the top of this, or let's say you want some even lower, go down to the 4 hour. So this would be our entry. You could be like, all right, I'm gonna set my stop at the back of this candle. So if it breaks back above this way, I'm out. And as you can see, it did do that. It came down, came back up, and then came down, and then it even went back up here again. So with the strat, the main thing that you're thinking about is you're thinking about keeping your risk low. So if you get stopped out of a trade, right? On cash accounts, if you don't have that much cash, obviously you might run through your cash, but at the end of the day, I'd rather break even or be at a loss of $10 than be at a loss of 200, 300, 1,000, 2,000. So sometimes you'll be stopped out of trades and then you re-enter back into the trade. I'd rather be safe than be sorry, because like Rod was said, some of these things should just go. And a good example of that is if you go to Market Facts, go to Market Resources Storehouse and look at my trade breakdown of Futu, right? Some of these reversals should just go. If you keep getting stopped out of it, then you just get stopped out of it, all right? But obviously you could have made some money right here. This almost got to your target and then took profit. You know what I'm saying? Sometimes you're going to see the percentage move that you want to see, all right? But that is how you could mark your stop, is you would just scroll down to a lower time frame, see one that you see, a candle that you like, and just put it at the back of it. All right. Because let's say this trade reversed to the upside. That's how we would set our pivots. We always look for the going to the upside, we set our targets at the top of it. But right now we're talking about the downside. But that's why, because people usually set their stop at the, if they're bearish, they set it at the top of the candle, right? Because everything's going down. If they're bullish, they set it at the bottom of the candle. All right. So if that makes sense so far, before I keep going, put it like a 3 in the chat or something like that. If I need to re-go over it, then I just re-go over it. Yes, this will be recorded. All right. So that's why you would go down to a lower time frames, because you just don't want to randomly pick a number and just plot it. You would kind of want to see a candlestick. The time frame I was just on was the 4-hour. Now I'm on the daily. There's a video and stuff as far as like if your strat indicators isn't showing up right, there's videos in market storehouse. All right. So I'm gonna keep going. So we know our entry is 301.95. All right. Our first pivot, first target is 300.68. Our next one is 296.60. All right. And then we can set another one for right here. Will it go down and always take out each pivot? No, it won't. Sometimes it's only going to take out 2 pivots. That's why it's like when you're looking at these things, you got to be reasonable. This from 296.60 to 288.61, that's a long ways to go. It might not go all the way down there. All right. So when you're looking at these things, be mindful of that. Also, we're on the daily time frame. All right. So when you're picking your options contract, for this, you would be looking at something that's either going to expire that week or that next week, depending on what your target is. If you feel like it can go all the way down here, just to give yourself some room, you might want to select a date. So like, let's say we were going into Monday and we were looking at this to the downside. We want to pick an expiration for not this upcoming Friday, but next Friday. All right. Let me read the chat real quick. So that's how you want to do it. Also, let me break down how you would pick your strike price, because some people are confused on how you would pick your strike price. If I'm looking at this, so this would basically, if I'm looking at it on a daily, I'm probably going to be looking at more of a swing trade. I might hold it for 2 days, or like I said, if you're looking for something longer, but they're trying to go all the way down here, you might hold it for like a week or something like that. All right. My entry is 301.95. My second target is 296.60. What I would do is I would go to Facebook and I would look at the strike prices. So let me pull that up on my phone real quick. Pull up the strike prices so I can see. Because I don't remember off memory. Type in FB. So for this week, if I was just focusing on these 2 targets, doing puts, I would be looking at, more than likely, I would be looking at probably either the 300 put or the 295 put. All right. And that's how you would select your strike price. If it was a 298 in there, I probably would have got the 298 because it's between these 2 targets. And I don't want to pick that weird 297.50 number because most people like whole numbers and stuff like that. But that's how I would pick my strike price. It would be based off of where it would fall if it hit my last pivot, right? Which, if we're going to say this is going to be the last pivot, I would like, generally speaking, for once it hit that last pivot, for my contract to be in the money. So more than likely, I would probably go with the 300 contract. If I would have hopped in right here, I probably would have went for the 300. That way, once it hit 296.60, it's like a couple spots in the money, right? So that's what I would like to look for. If I'm going to be day trading or holding for a couple of days, I'm picking something like close to the money, at the money, or no more than 3 strikes. If I'm swinging for a couple weeks, like let's say 3-4 weeks, maybe a month, I'm going to be looking at something probably a little bit further out, especially if it has good volume or open interest. So when you're looking at your chart, and right now we're looking at the daily, I'm going to be picking something that's either going to expire this week, this Friday, or next Friday. If I'm looking at the weekly chart, I'm probably going to be looking at something that's going to be at least two weeks out, and up as far as option contracts. Why? Because paying to have more time on your contract is good, but also I'm looking at a weekly time frame. So the move can happen in 1 week. It could take 2 weeks. It could take 2.5 weeks. But you oftentimes like to give yourself a cushion when it comes to time because you rather just be safe than sorry. All right. Now, when you're looking at your charts, right? So we went from the month. We looked at it, we say, all right, it's 2 up, it's green. We looked at the week. We saw right now it did a 2-1-2 reversal. Now, right now, it's like, I want to say probably 50% up into the candle. So we don't know what next week might bring. Next week might just be another inside candle. All right. So like, let's say next week is an inside candle. You generally speaking, do not want to play an inside candle. Why? It's because there's usually not that much room in that inside, on that inside candle, on that one bar. Usually it's a tight range. It's a consolidation. You don't want to play something that's very choppy. All right. But you would hear Rob say, you can play an inside bar technically on a higher time frame. I'm personally not playing anything that's an inside bar that's lower than a month, because on a monthly candle, that's a wide range. That might be a $10, $20, $30 consolidation, depending on what the stock is and depending on what the option contracts look like, how liquid they are, and how they trade. All right. So I do want to say, keep that in mind, because that Futu trade, it was an inside month at first when the trade was first taken. All right. So keep that in mind. You, generally speaking, don't want to play an inside bar because it's a tight range. Right. So if you're looking at a daily, like FB on a daily, there's probably an inside candle on the daily somewhere that's only like $2 or $3. You don't want to play in a range like that. That's too tight. All right. So that's why you, generally speaking, don't want to play inside bars. One, they're consolidation, but usually those inside candles are very, very tight. Now, if it's something that's a $10, $20, $10 and up swing, you can possibly play that, but you want to be super, very careful, and you want to focus on the daily and below time frame. All right. Because it might just be a day trade or whatever. So this past week was a 2 down. We just was on the daily. All right. We seen what the daily do. Then we would go down to the 1 hour. So right now, let's just say we were thinking about, matter of fact, let me slow down. When this 2-1-2 trade happened, let me delete this again. Let's see if we had an actionable signal on the daily, because also sometimes you'll have an actionable signal on your week chart, week time frame. So like this is doing a 2-1, you might have something on your daily time frame too. So a lot of times if you have an actionable signal, and as you can see, there was an entry, there's a 1 on the week. All right. So you have an actionable signal on the week, but you have another actionable on the daily time frame where you can actually get into that play a little bit sooner. So you can have actually a better entry. So as you can see right here, you could have taken the entry on the daily, because the daily was also doing a 2-1. All right. So sometimes when you look, that's why it's good to look at the charts. You might have an actionable signal on more than one chart. So we have with this, if we take off what happened this past week, we have an actionable signal on the hour. We have an actionable signal on the week and on the day. Those things are powerful when you have more than one actionable, when you have more than one time frame that has an actionable signal. Right now, they both, there's a 1 on the daily, and then there's a 1 on the weekly. When you can find more than one time frame that has an actionable signal, that's very good. That's a very indication that, one, you can hop in the trade a little bit early, but two, it's probably going to go the way if they're both lining up to go in that same direction, right? You have more than one confirmation. This is something that me and Kay have talked about plenty of times. We say, when you're looking for a trade, make sure you have more than one. I think you should say confluence or something like that. I don't know. I don't use those big words, but you have more than one confirmation.
Yes, areas of confluence.
All right. So that's 2 areas of confluence. If we go down to the 1 hour, let's see if there's an actionable signal there. No, it's not an actionable signal. All right. So our actionable signals would just be on the daily and the weekly. All right. So let me see what's being said. When would you jump in on a daily? Open next day. On the daily with this one, I'm still waiting for it to break the bottom of this one. So it doesn't matter I'm just waiting for it to break the bottom one because that's where my actionable signal is, right? And that's where you would want it to break, because when you're looking for actionable signals, you're waiting for it to break. You don't want to just hop in right at open. You want it to actually break below there, right? Because sometimes hopping in the trade too early could be, one, a lot of waiting, but two, there might be another opportunity that happens a little bit faster that is also a great setup that you can go ahead and you can take. All right. So far, do y'all get marking the entry and marking your pivots, and also looking at the different time frames and how you can find actionable signals on more than one time frame, and those trades tend to work out a little bit more? If that makes sense, drop a 3 in the chat, so I can make sure if there's anything else I need to go over with that. Your entry and targets. All right, I'll label it. So let me go ahead and label that now. So let me go. All right, so I'm on the daily. This would be, I'll paint this yellow. This would be my, oops, wrong thing. This would be my stop, stop pivot, to hop out the trade. This one right here would be my entry. One entry on daily. All right. Matter of fact, let me change that to that color. Change that to yellow. Boom. Stop pivot. Change this to white so they color coordinate. This would be my weekly 2-1-2 entry. Oops. Boom. Okay. Then this would be my change that to red. Boom. Boom. And then, oh, this would be my P2. All right, so for the person that asked, does that help you, even though these two kind of close together? Does that help you with identifying that? All right, it looks like you said thank you. All right, cool. All right, at this point, we'll go ahead and start taking questions for like the last 15 minutes. That way I can answer some of y'all's questions, and I like it to be more interactive. So I like those type of teaching moments. So go ahead and raise your hand. We'll start calling on you. So LJ, go ahead, ask your question. Actually, don't mute yourself.
Oh, sorry, I didn't have a question.
All right. Trey, you can go ahead and ask your question.
Hey. So this is kind of a weird question, but I'm sitting here trying to understand what y'all are talking about. But I think I'm late to the party. And I know Kay, she posts a lot of stuff like links to the videos in the Discord chat. But I'm kind of understanding what's going on, but I think I need to start a little bit earlier on. I don't know. I did join late today, so I don't know if you went through anything today.
If you can you type in the chat really quick? I'm gonna send you the link, and then that'll help you understand the candles, and then you can actually go back and watch the video, and it'll make sense to you. If you just know what the numbers represent and you're able to plot them on a chart, it'll all make sense to you.
Okay, in the Discord?
No, just type in the chat within the Zoom.
Okay. All right, thank you guys. I appreciate it.
All right, bet. Janae, you can go ahead and ask your question.
Okay. Hi, everyone. Thanks, Ray. And is it Kay? I always want to call you Carly.
My
But-
name is Kay.
All right, thank you both. You all always give great information. So for the volume aspect, is that like automatically included in the strat based on the size of the candle? Because I just want to know how to prioritize, like if I have a bunch of different setups, which setup would be best?
Rob doesn't take into account volume because all right, so like whenever I was studying like the Wyckoff method, they went over two things, and what they said, does effort match result? So sometimes you'll get a bunch of volume and that candlestick be small, really, really, really small. You know what I'm saying? And then sometimes you'll get a big candle with relatively no volume. So volume isn't always accurate. Sometimes you have a lot of volume, the price don't move, and you have little volume and the price will move a lot. So I wouldn't say pay attention to volume too much.
And let's specify this is, he means that specifically for the strat because it applies if you're using a different trading method, but specifically for the strat, volume doesn't play that big of a factor, but it definitely does if you're using a different trading method. If you're using indicators like, you know, your VWAP, your EMAs and things of that nature, it definitely plays a factor. But for this, it basically is strictly going off of price action.
Okay, so can you suggest how to, like if you have 5 things on your watch list, and let's say 2 or 3 of them all hit your entry close to the same time, and you can only take one, like what would be the best way to prioritize which trade to take?
It would be, how many actionable signals do you see? Is there multiple actionable signals on multiple time frames? If it's just on one time frame, I wouldn't worry about it too much. But if you see it across multiple time frames, that's good. Also, another thing that benefits your trade a lot is how close are the pivots. So for example, on here with this trade, these pivots are actually kind of far apart. All right. The closer the pivots are together, the better. Why? Because what happens is, like this was playing into the downside. When you hit going to the downside, the bottom, like let's say it hit the bottom of this pivot, what's going on is those people who are long, who set their stop loss at the bottom of that candle, now become sellers because it's broken through their pivot. So automatically their stop loss gets triggered, right? So now you have sellers coming to the market along with the sellers that were already there. And so that's how you would pick your trade and figure out which one you want better. If those pivots are tightly close together and they're on green candles, you're like, okay, as soon as this hit, boom, more sellers are coming to the table. And then that's going to push it towards the next pivot. And then boom, when that one hits, more sellers are coming to the table because the buyers who were long, they're now getting kicked out of their position.
Okay, that's super helpful. Thank you both.
All right, no problem. There was somebody. Let's see what the chat is saying. Can you explain a pivot? A pivot is where somebody naturally puts their stop loss at, right? So people put their stop loss if they're long, like on this candle. If I was long, my stop loss probably might be here. On this candle, if I was long and I'm saying I'm bullish, which that's what long means bullish, I might naturally put my stop loss at the bottom of this candle. All right. So that's why it's a pivot, because pivots are places where people tend to put their stop loss at, which is usually the bottom of the candle if they're long, and if they're short, if they're bearish, it's the top of the candle. All right.
Now tell them what candle they're selecting, because I think that's probably what they're getting confused on. Like what candles to use for the pivots.
I thought I went over that. All right. The candles that you're picking for your pivots is candles that haven't been hit yet, basically. All right. So if I clear the chart, boom, it's right here. All right. So this pivot technically hasn't been hit yet. So that's why it would have been your first. All right, on the daily. This is a red candle. More than likely, nobody's putting their stop loss here because long people wouldn't have got in on this candle. So then the next pivot that hasn't been hit is this candle. the next pivot that hasn't been hit, because price hasn't come down here to hit these pivots. All right. They haven't taken out these the bottom of these candles, and then the next one be right here. All right. So if I was bearish, this pivot has already been taken out because this candle went up. All right. So this one has been taken out as far as if I was bullish. All right. And I was set my targets. So if I was bullish, my targets would be right here and then right there. All right. Does that make sense to everybody so far, as far as setting your pivots, what pivots mean? If that makes sense, put a 3 in the chat. Are the 2 ups are pivots basically? Yes, 2 ups can be pivots, but not all the time, because if it's a red candle, technically it's a bearish candle. So that wouldn't be the that wouldn't be where you would put a pivot at if you were targeting it. All right. The top of this candle right here is a red candle, but even though it's a 2 up, it's still a red candle. People who were short, they put their stop loss up here. All right. Well, yeah. So technically, like I said, yeah. All right. So if you're going to the upside, this would be a pivot because it's bearish, but it would not be a pivot as far as like coming down to the downside, because nobody's putting their stop loss here because that's a red candle. All right. Nobody got long on this candle right here. All right. And actionable signals are 1 candles, ones, hammers, shooters. Those are your actionable signals. Kay went over that earlier. Also, there's videos that I've done on that in Market Resources Storehouse. All right. So let me go back to the people who raised their hand. All right. So Eric, go ahead and ask your question, Eric Smith. Can you say something, Eric? You unmuted, but I can't hear you. Looks like you're having technical difficulties. All right, I'm gonna lower your hand. Tamisha, go ahead and ask your question.
Hi, thank you, Ray and Kayla. I just had a quick question. I had emailed you. We had talked about this before, but is there something in the Discord that talks about how to set up these indicators? Because I'm looking at your screen and I'm still having the same problem with that NA, and it kind of gets frustrating when I have 4 charts up because it's covering up my bars. And I cannot figure out what I'm doing wrong. So is there something in the Discord that's kind of explains how to set up the indicators and maybe what I should turn off, what should be on when I click on each one of them?
I'll grab the video for you, Ray, and I'll put it in there. He actually did a phenomenal video on how to set it up. So I'm going to put that in the chat.
But also, if you have NAs, because I don't typically have them, go and click on the setting and see what's pulling up those NAs.
I did that. And if I click off everything, then it takes it off, but I don't know if I needed that stuff on. So
right. So what you might end up having to do if that doesn't work is exit, take it off your chart, like hit X and then try to reload it.
I've done that 42 times and I still can't figure it out. So
which one are you using?
The time frame continuity does that, as well as the
which one? See, it's a couple of different ones. So use this one that I have. Use that one. But like she said, it's in the video. Use all those. If that doesn't work, message me.
I'm using the board rider B. That's the one I'm using.
Message me on what is it?
I know what her problem is. That happened to me, so I know exactly what she's talking about. You have to go to your settings, which is that little wheel. Scroll up, go to your settings, and just you're gonna wipe everything clean and go straight to a default chart. Go to where nothing is on the chart that you've put on there. So you're basically just erasing everything and starting from scratch. And I literally had to do this today because if you notice in the chat, like a few days ago, I was talking about how my trading view got messed up. You start from scratch. And then you can add the indicator. So if you right over to the right, Ray, where you see that little cloud where it says unnamed, you're going to basically just get a fresh chart and then put it on there.
Okay, I'll try that. Thank you.
No problem. And let me know if it doesn't work and we can chop it up.
Okay, sounds good.
Okay.
Bye-bye.
It's more than likely a stop loss video on for Weeple. More than likely, I think I put a video from YouTube in the Discord or whatever. All right, but let me go to get Donnell's question. Donnell Johnson, go ahead and ask your question.
Hey, how's it going? So the question I had was whether hammer candles are more probable, or sorry, are hammer candles actionable signals for going long on a stock where shooting star candles, are they more probable for playing puts? I guess is my question.
Yeah, I actually like the all right. So there's on the strat cheat sheet, there's a 2 down, 2 up reversal. I typically like to play a 2 down, 2 up reversal only if that candle is a hammer. That 2 down is a hammer, particularly because I find that it's so explosive that sometimes, like, if you can catch it like before market ends, and that like especially like on the daily time frame, if you know that's going to be that it's going to close a hammer, if you can go ahead and like buy a contract to swing it to the next day, I found that I usually like that 2 down hammer, 2 up reversal to the upside, it usually like gaps up. Like, it's so powerful. Like, that's like my favorite reversal is the 2 down, 2 up with the hammer reversal. And for the put side, the 2 up shooter, 2 down, 2 up shooter, 2 down reversal, that's usually powerful as well. So yes, it's an actionable signal. Like in case presentation, you will hop in, your entry would be the top of the hammer and the bottom of the shooter. But like I said, sometimes that stuff be so explosive, it might gap up. You can possibly think about taking that trade like at the end of market, like power hour, like the last 10 minutes, you see for sure it's going to close as like a hammer or shooter. You might just want to go ahead and swing that boy, possibly, depending on the setup.
Gotcha. Thank you. Appreciate that.
Yeah, no problem.
That was a really good question.
All right, so that was the last question, y'all. Hope y'all like the chat. If you like the class, you know what I'm saying, let us know. And the Discord, add us at Will Squad. And then if you really want the video to be uploaded quick, at Ender. You feel me? Add them. You know what I'm saying? So if y'all like the class, make sure y'all let us know over there. We'll catch you in the next class. If you have any questions, my DM's always open when it comes to the strat. I love answering y'all questions.
Don't
So
go just yet, because I want them to be able to catch the video that you did on setting up the trading view for the strat. So I'm actually typing that in the community, but you guys, you can always find it in Market Facts and Resources, but I'm just going to make it a little bit easier for you guys.
you typing in the Discord?
Yeah, I'm putting it in the Zoom chat. So for everybody who needs a walkthrough on how to set it up in TradingView, I posted the video that Ray did. I just posted the link.
I also did a video on inputting the TOS indicators into TOS. Just go to Market Resources Storehouse. It's a video there. And it actually has the indicator for TOS. Like, I point an arrow to it, so you can just copy that, follow along with the video, paste it in there. So y'all can be able to get all those things. And then, like I said,